Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is a special edition where our focus is on the newly listed company Unicommerce eSolutions. The IPO got listed at a blockbuster stellar listing, about 118% premium, and that's far exceeded the pre-listing expectations, and this was fueled by massive oversubscription of the IPO and of course the robust grey market premium as well. Unicommerce IPO opened at 235 rupees on the NSE, marking a premium of 118% to its issue price of 108 rupees. In fact, the stock has more than doubled investors' money just on day one. Let's welcome the top management of the company to detail for us what goes forward from here as the company gets listed today and the company is starting their journey on the Dalal Street today. Joining in on this very special edition with us is Mr. Kunal Bahl. He's the promoter and the non-executive director of Unicommerce eSolutions. Warm welcome to you, sir. Thank you so much for taking the time out. And we're also joined by Kapil Makhija, MD and CEO Unicommerce eSolutions, who you heard it right from the time the IPO was also launched. Warm welcome to both of you and congratulations for setting a foot on the Dalal Street, and that too with a bang, a blockbuster listing at that. Kunal, this makes you a lot happier, and does it supersede your expectations as well on the listing?
Firstly, thank you for having us. It's a pleasure being here. We're obviously really humbled and are filled with gratitude for the amount of interest that the IPO has received. It's also a great responsibility that we now have on our shoulders as a team to deliver on these expectations. But you know, it's a good culmination, a good milestone of years and years of effort that our team has put in, and we are quite optimistic and looking forward to what the future holds for us.
Absolutely. So, Kunal, we spoke to Kapil earlier, but I want to understand from you for our larger audiences. Of course, you've got the street's verdict, you've got what the shareholders and the investors have already been hoping to have, and there is a lot of promise that the company holds, and that's why you've got this stellar listing right there. But for all the larger audiences which have still not got onto the journey, probably they would have not got the allotment, or maybe now they're looking in the listed sphere of the company. How would you like to explain? Because it's a very unique company. You talk about a SaaS platform, and you're also in the e-commerce space as well. It's a very unique combination and one of the rarest companies that we see on the Dalal Street listed. Help them understand, what is your unique business model and how do you earn money on every unit? If you could explain to us, and what goes forward from here, what are the kind of growth opportunities for you?
Sure. So actually the business is very straightforward. If you think about a brand that is looking to sell its products online, and e-commerce, as we know, is a really growing trend and has been so for the last 10 plus years. As these companies start growing and have more orders, they go from 5 orders a day to 50 orders to 5,000 orders a day. The level of complexity in the business increases manifold. And they're usually, when they start their business, they're working on spreadsheets. And those are fine when you're ordering, when the number of orders are that few. However, as the number of orders grow, you need software. Software that is intelligent, software that has a lot of robustness to it, and software that can actually keep getting better and better, because a company like us at the back end is continuing to make investments, both in the myriad integrations that a software like this needs, as well as adding more features. So think of it like a picks and shovels business for the e-commerce industry, where we are this invisible company that sits in the background, managing the operations. From a software standpoint, we don't do any physical operations ourselves. Our partners would help the brands do that, and so it's from that perspective, the key purpose of the business is to effectively simplify e-commerce for the brands that are selling online.
Okay. Also, Kunal, if you could help us understand, some of the key levers that even Kapil has highlighted earlier are, the rising e-commerce volumes, like you pointed out, which will definitely help your business grow. Second of all is your key clients base that you're looking to enhance as well. And of course, the increasing products that you could be launching in. How are you looking at these three key levers for FY25 growing for this year?
Look, these are the same levers we've been leveraging last few years. We have been adding new customers. In the last 2 years, our enterprise customers, which account for 90% of our revenues, have almost doubled. and we continue to obviously acquire more new customers and very luminary logos, if I may. We are also adding new products. So we have launched Unireco, Uniship. Again, these were needs that maybe didn't exist 5 years ago for the e-commerce brands, but as complexity is growing, number of orders are growing, we are really only limited by our own creativity and humility as a company to go check, go ask these brands that what else can we do for you to simplify your e-commerce operations and make you more efficient as a company and enable your growth and ambitions. We're also in in 6 countries and in Middle East and Southeast Asia. While it's still early days in those countries, we have some good customers in those markets, and we are continuing to service them. So overall, outside of obviously the e-commerce volume growth, which is a key driver for our business, and historically we've generally exceeded, our growth has exceeded the volume growth of e-commerce. There are obviously other levers as well that we will continue to pull.
Right, absolutely. Kapil, let's bring you into the conversation as well. I think the one point that I had asked you even last time is the increasing competitive intensity, and that is being brought as a key challenge because there are no entry barriers in this space. How are you looking to tap that challenge at this point in time?
Sure. I think the fact that we are simplifying e-commerce selling for we are today powering 240 plus integrations. So from a competitive intensity landscape for anyone to build some of these integrations, and more importantly, these integrations keep evolving very fast. E-commerce is a fast evolving industry. Every marketplace, every website has so much of more nuance built into it that it takes years to get to the scale and get to sort of the deep partnership that we've been able to build over many years. One is on the technology side. Building these integrations and maintaining is very hard. Second is the relationships that we have with our customers, which are long-standing. Some of the customers, and in fact, many of our customers have been using our platform for 6+ years, some even now for a decade. And also with the ecosystem players. Today, we have deep partnership with marketplaces, logistics players, to that extent that whenever there's a new innovation being planned, we co-partner on that. So for someone to now build some of these relationships also is going to be extremely hard. So I would say the entry barriers are fairly high, and we have very, very deep partnerships both with our customers as well as with our partners. And given, as Kunal mentioned, our vision is to become a one-stop shop for e-commerce enablement, more and more brands are increasingly looking at us to have everything solved under a single umbrella. And that's with that intent, we've launched 2 new products, Uniship and Unireco, and we'll continue doing that as well. So that for a brand, as we stand for simplifying e-commerce selling, as they're able to get everything under a single umbrella, it becomes very simple for them to manage their entire e-commerce operation.
Right. Kunal, coming back to you now, as far as the financial performance is concerned, what is the outlook really? We're already at the halfway mark of FY25 now. Do help us understand, you've already maintained what Kapil also highlighted earlier on our show is that your industry leading growth is what you have been posting over the last few years, and 25% is what the industry growth is expected at. What is your overall sense for FY25 on the revenue as well as on the margins front? On a stable basis, what can you sustainably put?
Sure. So, look, it's been 4 months in this year. We have seen an uptick in volumes in e-commerce, but it's still early days. Last year was obviously a very slow year, driven by, it seems driven by the consumption slowdown overall, as well as the funding issues of the ecosystem being there. But we are seeing a recovery from last year's volumes, but it's still early days, as I'm saying. That said, the medium-term story stays intact. In the medium term, we have a 25% outlook on volume growth for e-commerce in India. There is a tremendous amount of headroom left. Today in India, there are 4 to 5 billion e-commerce shipments a year. Compare that to China, which is at 150 billion shipments a year. So 30 to 40 times that of India. So it's only a matter of time India will also grow into those volumes, and through the entire suite of our products, we will continue to monetize this growth in volumes while simplifying the e-commerce journey for our customers.
Okay, got it. Now, the other thing, Kunal, that I wanted to also understand is as far as your international business is concerned, you have been following there as well. So, what is the expectation that we can have going forward between the domestic and the international business in terms of revenue contribution? How are you looking to scale up that? Which are the key areas, geographies that you would be looking at expanding your presence in?
Sure. See, international right now is a very small part of our business. It's about 3-4% of our business. So the contribution to revenue and profits is relatively negligible at this point in time. It is an area of investment for us and will continue to be so for the foreseeable future. We don't intend to lose a lot of money there, but we also intend to make sure that we keep a foothold in these markets. Um, we have a few customers. We have about 40 plus customers across these two regions, I would say, Middle East and Southeast Asia. And we intend to stick to these regions for now because they tend to exhibit structural features similar to the Indian market, where there's a lot of complexity, there are a lot of platforms, there are a lot of logistics companies, a lot of countries also. So there is that level of complexity that we see similar to the ones we see in India. So we will be in these markets, but we will it's hard to say that it's going to be a major contributor anytime soon.
Okay, and any new products that you would be launching that we can expect in FY25 from you?
See, we have 6 products right now between our warehouse management software, order management software, our seller panel, our omni-channel software, and as Kapil mentioned, the reconciliation software, UniReco, and shipping tracking software, UniShip. We have quite a significant suite, and we want to continue to grow our business off the back of these 6 products. There are always plans that we have for the medium term, which we are constantly evaluating and assessing. But the focus continues to be on the 6 products we have right now.
Okay. Kapil, also do help us understand, and then I'll come back to Kunal for his view as well. As far as the cash flows are concerned, is there a concern with respect to the cash flows currently? You are already a debt-free company. You've highlighted that before. But is there any concern there? Because you've also not raised any funds from this IPO. It's purely an OFS. So how are you looking at the cash flow situation? Would you need any fundraise?
So we have built the company with a lot of discipline. We as a business have been profitable for many years and have been generating cash month on month, year on year. Today, as of FY24, we are at a cash balance of nearly 70 crores on our books. So we have a fairly healthy cash balance, and we continue to add to this cash every month as we speak. So I think this was a pure offer for sale because given that we have been generating cash and have been profitable for many years, most of our investments, and we continue to do investments because e-commerce is a fast evolving industry. We continue to invest in our products, we continue to invest in sales and marketing, but all those investments have been funded by our internal accruals. And so far, I think we feel that we'll continue to be on that trajectory. And as far as cash balance is concerned, we feel fairly comfortable as a company at this stage.
Right. Kunal, would you like to add to that and also help us understand, are there enough levers present for you to scale up your business from the current levels? And what else would you need to scale up your business from here?
Sure. So, a lot of the levers have already been covered. But in addition to what Kapil mentioned on the cash, we do intend to assess very, very carefully potential inorganic growth opportunities. We've been approached by many companies through the years, but we've been very conservative about making acquisitions. But on a going forward basis, given we have a growing pile of cash and obviously currency, we will make very, very deliberate decisions around inorganic growth, but that is a focus for us going forward.
Okay, and last question to you then, Kunal, and that will be on the expectation on the trends within the e-commerce space going forward from here. Where are we at, and going forward, how do you see the India business versus the international global scale that we look at for e-commerce? How do you see this growing? Because that is exactly the space that will provide you with all the tailwinds.
Yeah, absolutely. So, look, the long-term e-commerce growth story in India is really intact. India as a country is still highly underpenetrated when it comes to modern retail, and a lot of the leapfrogging is going to happen using e-commerce. As I mentioned to you earlier, that we are at maybe 1/30th to 1/40th the number of e-commerce shipments versus China, and that probably is as good a proxy as one can get. So the long-term journey for e-commerce is highly intact. I think we as a company have to take upon ourselves the ability to listen to our customers, build products that help simplify their e-commerce journeys, and continue to innovate as a company, leveraging the latest technologies and leveraging the incredible human capital we have.
All right. Well, on that note, thank you so much, Kunal and Kapil, for being with us on this show. Again, many congratulations for this stellar day one show, and hope the sustaining performance continues. And we will have you back very soon on Business Today Television, as and when the quarter progresses and we see your first quarterly earnings once you're listed. Thank you so much for being with us.
Thanks a lot.
Thank you.
All right, viewers, we'll wrap it up at that. This special conversation with Unicommerce management as well on the kind of growth opportunities that exist, the company's vision going forward from here, and the kind of growth they're expecting on their revenue, profitability, and the margins going forward in terms of and vis-a-vis the industry as well. Many thanks for tuning in. Up next is Daily Calls. In one of the biggest overseas deals by an Indian company, Bharti Enterprises has picked up a 24.5% stake in BT Group. The more than a century-old BT Group, which was once a monopoly in the UK, is still the country's largest mobile and broadband services provider. The stake will be bought from French-owned Altis, which is currently the largest shareholder in BT. The deal will be executed via Bharti Televentures UK, a wholly owned subsidiary of Bharti Enterprises international investment arm Bharti Global. 9.99% of the stake will be bought immediately, and the remaining 14.51% after receiving regulatory clearances. Bharti has made it clear that it has no plans to make an offer to buy the whole of BT Group. For the Bharti Group founder Sunil Bharti Mittal, the deal brings a corporate journey full circle. BT Group has bought 21% stake in Bharti Airtel in its early days, along with the two board sets. According to Mittal, the current deal marks a significant milestone in Bharti Group's history as the group invests in BT. Bharti is the only one among the several Indian companies which own iconic British brands. Tata Group has long owned the Jaguar Land Rover and Tetley tea brands. Apogee Sundra owns the Taifu tea brand. Hamleys, the finest toy shop in the world, is now Reliance company. The 163-year-old BSA, manufacturers of motorcycles, has been revived by Mahindra and Mahindra. Similarly, Royal Enfield was a British brand before being given a new lease of life by Eicher Motors. Indian companies have, in fact, more than a foothold in the British industrial landscape. According to a report by Grant Thornton, UK attracted 108